Okay, so very good morning. It is Friday the 27th of April. Hope everyone is well. Usual routine, it's going to be me and Sam, so I'll talk a little bit about the news that's come out, and then I'll let Sam come on and talk about the charts and trading setups more specifically. So all my charts pretty clean at the moment, I'll leave that to him. But looking at the general sentiment this morning, I mean, what a difference a few days makes in a few weeks, because I was just kind of listing the positive things that have really occurred this morning. If you kind of just look at each day objectively, which is what I kind of tried to encourage our traders to do, is not look for every day to be complete repetitions, but has the narrative changed? And if you go back about 4-6 weeks, the world was in panic. The US was about to jeopardize a relationship that's ultra important with China, with trade wars. Geopolitics was really prevalent, whether it was Russia and Syria, whether it's Saudi and Iran, and tensions in the Gulf. Now we've had yields rising, policy tightening fears at the beginning of the week, 3% broken in the US 10-year yield, and then look where we are today. Now let me just run through. I did a tweet actually this morning. You might have seen if you follow and you use Twitter, but I think when you see it like this, in summary, South Korean peace. You have really good earnings reports, which we'll take a look at last night, and the Nasdaq shot higher. Amazon, really sharp move after market yesterday. Bank of Japan are now saying really they're dropping their inflation target. They're not going to tighten anytime soon. The 3% yield, it's backed off that after initial worries about the breach of that level. And as I said, the geopolitics have gone down. And if anything, I don't know if you've seen the videos of Trump with Macron, and also the Trump love going on for Kanye at the moment, but it's almost like the more you can distract the president, the less he is tweeting about these prevalent issues. And actually, if you look at it, it's just a string of positive news really at the moment. So I think in terms of investor sentiment, certainly on an intraday basis, just trying to pick your way through and understand the market's movements at the moment, I think what's interesting is the dollar is now recovering. So both major pairs under a bit of pressure in the currency space, and interestingly, cable continues to move lower. Again, I'll let Sam go over that a bit more, but you've got here, it's just coming down to that S1 139 handle. What a reversal that we've had over the course of a couple of weeks. I mean, look at that as a trend. Since the perception of the validity, if you like, of a May interest rate hike from the Bank of England being questioned, given the quite steep drop-off in core inflation in the UK, and the pound's revalued quite sharply. Again, I wouldn't say this is so much a Brexit play. That's really not high on the agenda, I'd say. This is more dollar movement, if anything. If you look at the currency pairs, certainly this morning, that's what the narrative is. Both pairs, both moving lower. Pretty much a similar margin given the dollar strength. But as I said, let's go through some of the headlines then and look what's going on and read these stories in more detail. So this is the one which a lot of the press are obviously looking at. How much of this do I think really fades into the hierarchy of the influential themes for this morning? I'd say actuality of market price. This is fairly low. But historically, from a geopolitical point of view, this is quite unprecedented, because you've got to go all the way back to basically the Korean War and the late 40s, 1950s. And I think it was, as the article says here, it's 11 years since the two sides have actually met. It's the first time the Korean leader has gone south of the border, if you like. And so this is, this is a big step forward. If you think about where we were, really this time last year, it's the summer of 2017 was at the peak of the intensity of North Korean ballistic missile testing. And at that time, kind of August, I think it was, and in September, this is when North Korea were conducting huge military tests, shooting missiles over the northern island of Hokkaido in Japan. They're making quite sharp comments. The tit for tat with Trump and look how far we've come in a fairly short period of time. So I think North Korea, as we've already discussed, I think several times before, is well off the agenda, I think, for market prices. And so, although this is a meaningful development for politics, I think it's inconsequential for global financial markets. I think we've moved on a long time ago from this issue. One interesting point that I've read from some analysis about Korea this morning is that obviously a lot of people are looking at the positive side of this shift that we've seen, but some fear there may be unintended consequences of ending the war. So peace could chip away at the rationale for continued deployment of US troops in the south and the extension of Washington's military alliance system to Seoul. So already there are a couple of pessimists looking at maybe this is a strategic play by the North in order to long-term see a fall away of military presence from the US, or the need for the US military presence to be there on the peninsula. That would certainly be, I would say, destabilizing potentially if things were to get or the tension was to rise again. The other thing as well, some experts see Pyongyang's pursuit of a peace treaty as a mere ploy to avoid discussing further progress towards denuclearization, a gambit that has been used successfully in the past. There were some reports, I'm not sure if you were following the FT earlier this week, saying that actually one of the key nuclear testing facilities in North Korea had collapsed, i.e. the facility has stopped working due to this incident. And so actually this is just a bit of a ploy to buy a bit of time. So, who knows how this will unfold, but let's take it for what it is this morning, the two shaking hands and in meetings as we speak. Moving on. This was obviously the yield, and I thought this was quite interesting because even though we've breached the 3% level in the last day or two, and this has caused some momentary panic amongst investors, quite interestingly we've moved back below there just a touch for the time being, obviously still elevated at the moment, but again it's just interesting to see with the sentiment that as this is pulled down with these other positive factors at play, it's kind of lifting, I think, a bit of the sentiment generally. Bank of Japan, I mean, no real point talking about this, I don't think, because the Bank of Japan are so far behind the curve of policy normalization comparative to the US, for sure. But even the case of the Bank of England, the ECB, and so on and so forth, that any signs and murmurs of them getting towards hinting to tightening policy seem to have been put on the back burner. The BOJ maintaining stimulus, removing language of timing of 2%, which is their inflation target. Earnings, this was the big one, of course, after market. To give you an idea, Amazon is the third largest company in the Nasdaq 100. You also had Intel, which is the 7th largest. Both had exceptionally strong earnings, but Amazon, the real highlight. Amazon shares jumped 7% after market. Now, you're talking about a company that's up 30% year to date. We're only coming into May at this point, and it's one of the largest companies in the world, and it just shot up 7%. I think I saw a stat. Bezos's net worth now is just shy of 150 billion. Not bad for a guy whose company was started in the late 90s. So having a look at the earnings setup, I mean, here is the S&P, and obviously equity futures. Europe on the front foot this morning, playing catch up with some of that movement overnight in Asia, but also late in the US. But check out the Nasdaq. That's the aftermarket closing bell and the release of Amazon right there. And you can see the aggressive pop higher that we've had. Okay, there's been a lot of European earnings as well. I'm not going to run through them all because there's just too many, quite frankly, to go through. I saw RBS generally was quite upbeat on the headlines, but actually seems to have disappointed investors. The shares were actually seen lower. A few other big names. Renault shares down about 2.5%. Deutsche Telekom, though, in Germany up 1.2%. Daimler had I think they raised their forecast as well that I read. Capgemini in France, they're up about 4%, albeit fairly small stock. So a couple of positive earning highlights as well, just to speak of. This then, just to recap, is the ECB, and I'm not going to talk about this as well too much, but this was kind of, I did post this yesterday, this was the crib sheet which I gave to you guys ahead of the event yesterday, of the kind of sliding scale between top, most dovish outcome, to the bottom, most hawkish, but then defined by the interest rate and the policy outlook, the economic outlook, geopolitical risk, and references to the euro. And I think the one that was quite surprising, because if you remember, the euro actually rallied at the time of the event, was there was no real FX talk, no explicit addressing of the euro's level. And so hence the thinking being then that they're not phased by the current nature of the elevated area that the pair is trading in at the moment. So consequently the euro-dollar pair rallied. However, it is coming off this morning, and although that's dollar strength, one thing that did come out, and this is quite the reason I'm pointing this particular story out and bringing it to your attention, is this is very classic strategy from central banks after an event. So yesterday the euro kind of responded positively to what the ECB did. Then you get a source comment from Reuters that comes out just a few hours later and says ECB policymakers meeting on Thursday, they were keen not to upset investor expectations for a gradual withdrawal of ECB's monetary stimulus, despite some concerns about the state of the economy. And so basically just going through it, the ECB are keen to maintain expectations on stimulus exit, trying to manage again markets' perception and expectation of the event. So again, what I try to teach the newer traders is that even though you can never predict exactly when the news might come, you can definitely heighten your expectation of what the news might be around. And actually you can pretty much also assess when the window might be of opportunity of when source comments might occur. And obviously in this process you usually get source comments in the run up to a meeting, and then quite often immediately post the meeting as a strategy by the central bank. So something to just be aware of. Okay, quick look at the actual calendar for today. And this morning we are coming up to the release in 10 minutes of the German unemployment change, unemployment rate. I would say I wouldn't be looking for an immediate flash of activity in European products on the back of that, but certainly I think it is worth monitoring when that comes out. UK GDP though, that's probably going to be quite interesting. This is the prelim reading, looking at GDP in the UK. It's a tough one to call actually, the performance, but the general, I mean this is looking at the 3 months to December of 2017, but expectations are obviously of economic slowing of the economy in terms of its growth potential, but here this is a preliminary reading and we're not looking for too much change here from the previous. So worth watching, certainly just given the levels of which cable is trading this morning. Otherwise, these economic sentiment numbers, they look interesting, I know from the sounds of them and covering the entire Eurozone area, but very rarely do these move the market. So I'd classify this probably as tier 2, if not tier 3 data. Moving on into the afternoon, this is interesting though. US GDP for sure, that's probably going to be the economic calendar highlight, if you like, for today. And something definitely we'll be watching. This will come alongside PCE. Michigan, lesser significant given it's the final reading for the April releases. We do have some sovereign rating updates coming out today. But to be quite frank, I think people are not really focusing on sovereign credit ratings. I don't expect any of these to see any meaningful change, even though we've got countries like Germany, UK, Italy, and so on and so forth. Probably the only one that might be interesting is Italy. S&P in their latest review to update just given the political situation, but quite frankly I don't expect too much to come of that. Speaker wise, just going through the morning, ECB's Mersch coming up at 9, S&P's Jordan, anyone trading the Swissy. Mark Carney is speaking actually later today. He's speaking at a lunch in regards to finance in schools, so it's kind of off topic, but what I would say is that when you're assessing a speaker or a speech, an event, even though Mark Carney is scheduled to speak on something completely unrelated, think about the current narrative of what people are looking for with the Bank of England. People are quite unsure at the moment because Mark Carney was quite dovish after we were, as a market, pretty much fully priced in for a May hike. So the market is quite unsure of where do we go next. So with that being said, I would actually recommend watching that Carney speech very closely, because I reckon that he might say something. Maybe not directly at the event, but on the doorstep of the event, on the exit of the event, in a Q&A with the press, in an article maybe that comes out thereafter and tweeted by a local journalist, something like that. So I would say at 3 o'clock, definitely have your wits about you for that. And then finally, for the earnings, you've got Exxon and Chevron coming out pre-market. Now, just to be clear, because I have had this type of question before, oil prices will not move on the back of Exxon and Chevron earnings. Yep. So the earnings are backward looking, don't forget, of the quarter. It has no ramification on the price of oil. The price of oil, of course, does have a ramification on the profitability of these firms. But obviously we're not going to know that until the coming quarters results come out. So is this going to move the market, so to speak? I would have it a guess no, because this is only just 2 companies and they're of a smaller size. I wouldn't be looking for a snap trade in the S&P to react. Definitely not usually the case. All right, let me hand you over to Sam. He can look at some of the charts, but wish you a good day and a great weekend.
Hello, let's have a quick look over the currency markets. As we've just seen here, the euro bouncing off that S1 quite nicely, I think, to the upside. It's got to be aware of where we found support this morning, last night, and then even into the afternoon yesterday to the upside. While that has already worked on that sort of classic short, you can see we broke through. I think still going to be the key area to focus on if we were just to push a bit more to the upside. To the downside, obviously, other than the S2 below, we haven't been this low for quite some time. So a market level just before that, we had the beginning, or the low of the 12th of Jan that I would want to have marked up on the chart. And then we just get this one here, the low of the 1st of March to the upside. While that seems quite far away, and you can see on this chart here, it actually sits just before the pivot. These would be the points of interest that I would have marked up. I don't necessarily think we're going to get anywhere near the pivot for now, but it's a strong area of resistance I would be expecting if we were. So first sort of trade idea, I think we'd be looking at the previous low of the day, or if we get a continued push through the S1, key level just before the S2 for that currency pair. The pound, obviously, focus is going to be on the sort of the data that would be to come out 9:30. So in terms of looking for an exact place to get in, I think while the trend is clearly to the downside, that data release could change things up. So just perhaps tread a bit carefully before that. This is obviously a dollar related move this morning with the dollar index on the highs. Lows of yesterday obviously marked up on the chart, and the pivot area looks quite nice with today's high as key points of interest, but probably best waiting for now for the data in just over half an hour before that sort of comes out. I wouldn't want to make any rash judgment. In terms of levels we could go to the downside, same with the euro. We haven't really been around here for quite some time, and the low of the 16th of March, let's just put that back on a lower time frame now, you can see just midway between S1 and S2 on the future. So I'd be looking at that level as a potential place to take profit, as an area of support as well, should we get a continued move downwards. The other dollar pairs to have a quick look over, you've got the Aussie dollar here, which has continued its trend as well to the downside. And let's have a quick look over that. So sitting on the S1, the previous low of the morning, rather than the low of the day, offering that level as resistance to the upside following that push down that we saw. We'd be looking for this market really to continue its overall trend, which is down. Pivot and the high of the day, key area to be aware of. If we were to get retracement, I would suggest that if that was to happen, it would be later on in the day. And again, longer time frames to be looking at if we were to get this continuation. And from a longer term perspective, you've got the lows of December which, you know, while I wouldn't expect us to get a test of that level today, not a million miles away if we were. Just really put this on a longer chart. It'll be interesting as well for the Aussie dollar where we finish this week. You can see we have, once I get this trend line up and running, give me 1 second, broken through that this morning. Not this morning, this week, sorry. If we can, well, it could take something strong to not break below that trend line, but would definitely be an area of resistance that would interest me if we were to get a retracement over the coming weeks, to look to perhaps to go short on that from a technical point of view anywhere around here. Key level, as we mentioned, that low from December, not too far away, but a key technical break there of this trend line that's been holding quite well, since the beginning of 2016. Dollar yen, this is low this time frame down again as well. We just popped through the high that we had yesterday. First real test of that, and the R1, bit of resistance as you would expect. In terms of levels of support to the downside, a pivot is obviously the sort of the next technical level. However, I feel that area as a whole has just been too choppy. So again, for this market, it's half tricky in really trying to get the exact perfect place to enter. So I think maybe if we were to get a confirmed break of the move higher, it could be an opportunity. But for me at the moment, I don't really fancy this trade as such, unless we were to get a push on or we get retracement down to the S1, to be honest. Let me know your thoughts on that. If anyone has a better sort of idea, we'd definitely be keen to hear that for the dollar yen. So my idea at the moment would be either S1 to go long, obviously taking into account the market sentiment at that time, or a push higher. Other than that, not too sure, because obviously we're coming up here to an interesting resistance area on the longer time frame. So again, it'll be interesting to see where we close the week for this dollar pair. Same with the euro and pound, of course, as well. We're near strong areas of previous support. Looking elsewhere in equities, obviously that push into the close yesterday has worked very well. Would still be keeping an eye on the previous level of support turn resistance yesterday that we did finally break through around this area. Pivot looks quite nice as well in terms of levels to the upside, other than the high that we had yesterday for the S&P. You've got the high of the week, the 24th, not too far away from today's R1. I think if we can, get a confirmed breaker, that we had yesterday above this level for equity, so again where we close the week, will be important. But let's just have a quick look over this overall direction of this market. It's hard to call. It's hard to call. It really is. The strong move that we saw down on Tuesday, can we erase that today? Can we get up to the R1? I wouldn't bet against it. Put it like that. Nasdaq obviously pushing on the most yesterday, and not far away from the levels that we actually saw at the back end of last week. So we've erased Tuesday's losses. The high of Friday has been broken through for the Nasdaq. Would favour the upside. Ideally, you'd want to see this level hold as an area of support. I think if we get a breakthrough of that, you might see the Dow Jones and S&P come under a bit of pressure and perhaps get closer to their pivot points. Oil, well, before we go back with oil, really nice trade yesterday. I know a couple of people were looking to get in the Nasdaq on the break of that R1 and the previous high. Just came at probably the wrong time back into the sort of the close of the day, that it continued to push up, as was oil. Pivot looked really nice all day. You had a lot of price action around that point yesterday and held really well. It was not the easiest hold at the time around the pivot. If we lower that time frame down and look at the exact time it spent around there, would have been tricky. Then the second test again would have been hard to hold, albeit a failed test of that low, and we did push up into the close. Directional bias, while looking at what we can see here right now on the chart, it's choppy. I think favouring the upside would be the way forward. Lows of yesterday not far away from S1, high of yesterday not far away from the R1. The pivot and yesterday evening's high, sort of the midpoint of that area to be aware of going in. Gold, which pushed down to the lowest points today with the dollar strength. Strong area support to be aware of that we had yesterday, Asian session, and just now. Didn't really get a confirmed break of that. looking at the top end of the range, you have all the highs that we marked up, well, that I'm marking up here from last night and into this morning. So key range to be aware of. The pivot sits quite nicely with the pullback that we had yesterday before the key level that we broke through yesterday afternoon. So while favouring this trade for later on, you can see gold, which has been trending down nicely over the last few trading sessions. I'd favour that to continue. I think maybe a break of the low down to S1 could be a decent opportunity. Have a quick look over the dollar pairs. Just the dollar index is still on the high. Keep an eye on that S1. Are we going to get another test for the euro? Cable with the data coming up, still not far away from its S1 again, 139 handle. Just over the last 5 minutes we've had a further sort of test down to that area, but that could all change as we know in 30 minutes. Aussie dollar still sort of hanging around those lows, not much conviction here at the moment to the downside. Strong area of support with that previous low. But any questions, please do get them in the chat, and if not, have a great weekend ahead of you.